And I got more and more to the Bitcoin story. And so found myself getting passionate about what Bitcoin represented for folks that wanted a safe store of value around the world. On the infrastructure front, after COVID, I built a very large COVID testing company with some partners, and we built healthcare infrastructure around the United States. And so when the opportunity came to start building very, very large Bitcoin mining infrastructure, it was a tremendous way to apply that skill set to a topic I was immensely passionate about.
Nice. And so you started at US Bitcoin Corp. And what were you doing there?
Yes. So at US Bitcoin Corp, I was the chief commercial officer. So I worked closely with my partners, Mike Ho and Asher Canute, on building out one of the largest private Bitcoin mining companies. So we did everything from self-mining. We did some hosting operations as well, but we were in the weeds, right? So we developed a very accurate assessment of what made a good site run. And that gave us a good sense of operational discipline and results delivery when it came time to go to the institutional level.
And then what was the shift for you between Bitcoin Corp to Ionic Digital? What was the jump there? And then kind of like what similarities do you see moving from Ionic to ABTC? Would love to hear that perspective.
American Bitcoin, to rewind the story back to the US Bitcoin days, basically we had US Bitcoin Corp merge with Hut 8. So this was a very large merger between a public and private Bitcoin miner in the space. I then joined Hut 8 as their chief commercial officer, running operations there. In that process, around the same time, Celsius, it used to be effectively a very large financial services company in the crypto industry, had gone bankrupt. And in the bankruptcy, there was a pile of hundreds of millions of dollars worth of machines that needed to be turned on, right? This is what we called the machines and boxes problem, the MIB problem. And my role in that transition was to step in as the CEO of Ionic, separate from Hut 8, separate from US Bitcoin Corp, and execute that turnaround. So I stepped out of the Hut 8 seat, went over to Ionic. Now, Ionic had, for a period of time, a operational relationship with Hut 8. So I was now working with some of my old colleagues, albeit from the Ionic chair, to deliver a very, very large sort of trophy asset site called Cedar Vale in Texas. And so I worked with the Ionic team, which we built alongside the Hut 8 team, which was doing a lot of the operational work to develop their Cedar Vale location for Ionic. So I did that for the better part of a year. We got that site cash flowing. Ultimately, I stepped away, took some time off. And then when the opportunity came to kick off American Bitcoin with my team from Hut 8, along with Eric Trump, I leapt at the opportunity, and here we are.
So Eric comes to you, he says, let's do American Bitcoin, or what is the initial starting of American Bitcoin, and why does Hut 8 see the need to separate it from their Bitcoin mining operations into a new venture? Why would Hut 8 want to give up their Bitcoin mining?
So if you think about Bitcoin accumulation in 2025, there's really two layers that are now at play. First is the mining. So mining was the original way that folks got Bitcoin for less than market price. Typically you or I could go in Coinbase or whatnot, we could buy spot. But if you wanted to accumulate Bitcoin with as a sort of a premium to your effort, mining was the path to do so. Now, to do so, you needed tremendous energy, knowledge of infrastructure. There's a whole host of skills that go into Bitcoin mining these days to really produce Bitcoin at a profit. So Hut 8 had that infrastructure in place. They had the skills. Hut 8 has the team. But what would be very interesting for Hut 8 would be to pull apart the mining assets and put that into its own publicly traded ticker, right? So if you think about it, Hut 8 has become a very vast company. It controls energy assets in Canada, high performance computing, the Bitcoin mining venture. They have $1 billion worth of Bitcoin on the balance sheet. Hut 8 is a pretty sizable enterprise. So when we went out to the market, it became a great opportunity for us to take the Bitcoin mining machines, not the literal substations and the transformers, but we took the machines, the firepower, right? That's about 25 exahash today. We took that and we wanted to pull that into a new corporate vehicle that would be solely focused on Bitcoin accumulation. It's a win-win. Hut 8 is able to help us acquire Bitcoin cheaper than most through really efficient use of energy, mining at a lower cost than almost anyone else in the world. This gives us an immense structural discount. We're then able to use Hut 8's infrastructure to become backbone of America's Bitcoin ecosystem here in the US. And obviously, as Bitcoin becomes this global store of value, it is critical that the USA becomes central to that process. So we're able to do so from here at home. And then finally, that Hut 8 relationship, again, just gives us a unique way to win, right? It vertically integrates us without the heavy costs that would come with us building out our own capital expenditures on substations and transformers. So we get the same economic advantages that this had inside of Hut, but we're faster and we're leaner and we're able to get more Bitcoin a day.
Yeah, and I think you mentioned it before that your mandate is maximizing Bitcoin per share. Can you define that exact formula for investors and behaviors it's going to discourage? So I think one of the biggest things that has hurt miners in the past is that bloated SG&A costs
Yes.
as a public company, that now the investors are kind of losing confidence that this is actually a Bitcoin accumulation vehicle. So what is American Bitcoin doing differently?
Definitely. So American Bitcoin is built to specialize in Bitcoin per share growth. If you were starting a brand new Bitcoin accumulation vehicle in 2025, you'd want to pull the best of the mining companies and the best of the treasury companies. And American Bitcoin has both. So on the mining side, you mentioned something about how a lot of the peers in mining had over time increased SG&A. Now, there's a variety of reasons this could happen. Companies could have gone into research in new topics. They could have strayed, frankly, from the Bitcoin mining mission. But we came in here with Bitcoin as our North Star, right? And so everything really drives back to Bitcoin per share. So if you think about the SG&A, because we have a relationship with HUT, we're able to take a lot of those roles and put them outside of our company. We're very lean at American Bitcoin. We can run American Bitcoin with less than 5 full-time employees. All the money that we raise, all the revenue that we generate, everything is geared towards Bitcoin and Bitcoin mining versus other projects.
And so when you have this Bitcoin per share metric, how is that superior compared to hash rate, fleet exahash, your maybe margin to mine a Bitcoin, the hash price? Why is this the singular focus versus some of these other core metrics that Bitcoin mining companies throw around?
American Bitcoin is a Bitcoin accumulator. So we have mining's great, hash rate and cost of hash. That's a North Star in mining. So those are important to us, right? We do look at, obviously, as a huge competitive advantage for us to make sure that our energy costs are great, that our team is lean, and that we're not putting money into anything other than the exahash on the mining side. Now, that being said, these days you have more than just mining in the Bitcoin industry. You've got ETFs and you have treasury companies. So the ETFs are an interesting inclusion into the Bitcoin investment opportunity ecosystem, right? With ETFs, you had a means for folks, the everyday American, to gain a one-to-one exposure to the Bitcoin network for their investment. That's great for people that want to just leave it, right, and have some exposure to the hardest asset. But we don't think that's the best way to gain exposure. The best way to gain exposure is to have someone who's out there accumulating Bitcoin on your behalf. But that's not only going to be through mining. So the mining is, of course, important. It's a way to get Bitcoin at the structural discount. But there's also the treasury side. And so to explain the treasury side a bit, what we're building there is a company that is able to harness the volatility in the public markets that comes from having a mining business, that comes from having a Bitcoin stack. And we're able to effectively trade around that and amass capital that is all routed into Bitcoin as well. That is more than what we make in terms of mining, right? So the mining generates a steady stream of Bitcoin at a structural discount to the market, and we do so every day. On the other hand, we're able to run these financial vehicles that allow us to accumulate Bitcoin at spot. So on one hand, I've got a lever that is mining. On the other hand, I've got a lever that is blending down the cost of spot, right? Or rather adding in increased Bitcoin from a treasury standpoint, giving everyday investors exposure to both of these two engines, right? And we believe that if you want exposure to Bitcoin and you want that exposure to grow, it makes sense to work with an accumulator like American Bitcoin. Now, if you want to use a treasury strategy, we have that. If you're more interested in the mining ethos, that's something we do well as well.
And so that $2.1 billion that you guys recently raised, how are you going to allocate it if you've already disclosed that across treasury and mining? Or how do you view allocation in general on, let's say, $1 billion of capital, hypothetically?
As a low-cost company, we can use the capital markets to buy Bitcoin directly. Now we've got a lower cost of capital than we would have had as a private company. We have a $2.1 billion financial instrument that you've referenced that allows us to tap the markets for Bitcoin directly or go out and buy machines. So every day we're really looking at what is the opportunity in hash price, what is the opportunity in firepower that we get from mining, and then what is the equivalent amount of Bitcoin that we could buy if we were just going to the market. And so we're attentive to the dynamics here. There are going to be quarters, days, weeks, months where it makes sense for us to simply buy spot, because that is something we believe is the cleanest way to gain further exposure to Bitcoin. There will be other times where mining makes sense, right? Building that fleet out further, maybe go from 25 exahash to 30, 40, 50, beyond. We're able to do that very rapidly, again, because we have that unique relationship with Hut 8, which gives us the ability to grow our energy pipeline and our infrastructure assets in response to demand we get for growth. Today, right now, we're focused on Bitcoin. We just did a tremendous deal that allowed us to grow our fleet size to about 25 exahash. This has put us in the top echelon of miners. We're out there producing coins and securing the network the same as everyone else.